time frame, and on the hourly time frame we have a textbook bullish candle. We have a textbook order block right there. It made the buy, took liquidity on the left, massively rushed lower, and caused the break of structure. And in this case, I will take the hourly zone because it offers me a lot of wiggle room, and when the market comes in, that's when I'm going to be dropping to the lower time frames and looking for my entry patterns. But again, if you just want to enter like in a swing trade or you want to be refined, then take your 15-minute zone, set your limit right there, and stop loss above. Again, different strategies. We're going to touch on those a little bit later in the next video pretty much. But let's have a look at some examples, right? I always want to give you examples. We're also later going to jump on the charts, so for me to actually show you how I do it. So this one is complex, so you might have to pause the video and study. A bearish candle, right? So we start from here, and again, market structure is key. So here we have like a bearish candle, then the market pushes up and causes a 15-minute break. So we have engulfing candle, we have momentum, and we have a break of structure, right? And you can see the next candle immediately comes in and retests this area. Okay, so you can see like in this case, as I've said right there, this bearish candle is not engulfed by the next one. Again, you can make an exception. You can also take this candle, which is the engulfed one, or you can go to find another time frame where you actually find that bearish candle being engulfed. The market pushes, it creates a higher low. This, according to me, here is a structure break. According to my rules, there we have a trend change to the downside. What caused this trend change? The last bullish candle. There is the break. Once again, this is the supply, but I would also always account for the high, okay? But this is where the OB, this is where the supply happened. The last buy, sell, massive sell. The market comes back, retests it, massively launches lower, okay? Here, before the break, what happens before the break? The market creates this buy candle and massively launches lower. Okay, so then we're essentially going to be looking for the pullback, but what the market did, continued to push lower, created a lower high, and launched another massive move lower, right? So again, in this case, this one is still valid, but in my strategy, my very systematic system focuses only on the most recent ones. So I'm giving you a very big hint right there. I do not focus on old supply and demand zones, right? So here in this case, this is the last bullish candle before the break. The market massively comes in, right, and just breaks it. So maybe we got an entry right there. I'm looking at the wicks. Maybe you got a 1-minute entry. I'm not sure. Well, maybe you take a loss because again, you can see right there, the market got oversold, demand kicked in, and the market is starting to reverse. And there is probably a demand zone on the left, which is why higher time frame always matters. This is maybe a 4-hourly higher low because this is the 15-minute we're looking at. So maybe this is a higher low. The market aligns bullish, right? And then have a look here. Remember the old one, the market comes into the old one and actually makes a trend change down, okay? But yeah, so it gives us like a little short-term bearishness, but again, as I keep saying, keep in mind the hard time frame. This is the bearish candle. It's not fully engulfed, so we have to look at a different time frame. But again, look at the engulfing candle right there that caused a break of structure. In fact, the trend change with a lot of momentum. So this one is still relevant because it signifies that a higher low is forming. And this is a very powerful demand zone because it's the one that actually caused the trend change at a 4-hourly higher low formation. So very, very, very powerful zone. I've backtested this. We actually have it as an entry model in my community. So what happens later is that again, in terms of the 15 minutes, so again, there are a lot of details on this example. In terms of the 15-minute, this is the major high and this is the major low. So we are bearish. But again, according to my entry rules, I will be looking for longs from here. Based on this, I call it a TC demand zone. The market then pulls back into the supply that actually caused the trend change to the downside, reacts. What is it building right there, guys? Let's focus. What does it build? A very big consolidation. What happens? Fake move below the consolidation into the last sell to buy. That was internal. So this is internal. Why? Because this is our major high and this is our major low. Anything inside is internal. But you can, of course, also read the internal. So here we had this sell-off and then the market massively expanded. So then again, what caused this expansion? This is the last sell candle before the break. And yeah, I see it massively pushing up. So probably it's not going to return. So we got to right now keep following with the base supply and demand that just pushes and continues. Okay, so very comprehensive example. Study this one. There is a lot going on. So let's explore all of these. So right now I'm going to be, so keep all of these in mind, right? So I'm going to be dropping right now on the 1 minute and actually showing you how you can execute from those supply and demand zones on the 1 minute by using the same OB and the same supply and demand rules. So let's jump into it. There is the one that, so this is the OB that caused the TC and a potential full hourly high. So this should be this one. Right, so this is where we are at a full hourly high. Right, we make the first 15-minute alignment down, which means that the pullback is starting. So this is where we're going to be looking to enter a trade. So dropping on the 1 minute, what do we have? There is this massive range, a massive buy, a massive sell-off. The market slowly pulls back, pulls back, pulls back, pulls back. Tap into the zone, give us a 1 minute alignment, right? So then again, what caused the alignment? You can see there is a little bearish candle right there. What I would do in this case is, once again, I'm really not going to look to refine too much. I'm just going to take this whole buy to sell and enter somewhere right there. But I've done this very precisely towards this bullish candle right there, and you can see the market came in very aggressively. How did it came in? With a massive fake move, a massive buy, stopped right there exactly, and started reversing. So what is this buy to sell right there? This is the fake move they're launching. So what are they gonna do? They're gonna come back, take some off, and then continue. And again, what I usually do is I take the buy to sell. And again, as I told you, we don't know if they're gonna tap the open, the 25, the 50, or the 75. In this case, they perfectly reacted from the 25% of this buy to sell, right? So this might be a little bit advanced for some of you if you're looking this for the first time, but I know a lot of your experience with that stuff, so hopefully it makes sense. So that is the first example. Let's have a look at the second zone we have. So this is the one that, so this is, let me show you. So this is this zone right there. The market made a new lower low, right? So we had this massive drop. So there is the short trade we took. This is a massive trade if you actually, of course, hold it. Right now, we're looking to enter from here because this is the last high, this is the last low, right? And we're looking for a short. However, the market comes in. Again, what it does here is massive sell-off, pushes, consolidates, pushes up. So do you see any entries here? Not really. If you don't enter aggressively, higher high, higher low, higher high, higher low. Yeah, it pretty much broke on this wick right there. So this zone was immediately invalidated. And as I told you, we had like 2 wicks right there. There are no entries. So we do not take a loss from this zone, which is perfect. Okay. Next example. So this is the one, this is the old one, right? Which is a reaction point. But again, even if you trade from it, the market, what does the market do? It makes a range. It creates a massive buy, creates a sell, then comes back to retest that buy, gives us the entry. Okay. If you zoom in, what caused this sell, right? Well, you see here, I've taken this little bearish candle. Again, in this time frame, you can use a different time frame to find the proper candle. You can draw it like this. You can draw it like this. You can draw it in many ways. What's important is that you understand the psychology behind it. The market came in, rejected for a little bit, pushed down, pulls back, pushes down. Where does it go? Into that TC demand zone on the left. That is a strong one. Taps inside. Lower low, lower high, lower low, lower high, lower low, aligns bullish. There is the last sell. There is the last buy that aligned bullish. Again, where is the market going to come in? So if you do the mistake of doing this, in this case, you miss out on the trade. So again, as I always say, keep a zone bigger. And if you get a good stop loss, just enter the trade. Because in this case, we didn't even go to the 25%. Right? So then we have a push up. But then again, if you remember, guys, in this case, this was our major 15-minute high. This was our major 15-minute low. So we took the long, but we also have to take the short. Why? Well, because we are also bearish. The market taps into the zone, higher high, higher low, higher high, then it aligns bearish right there. You take the trade and we're running into profit. So you can see there are trades everywhere when you pick the right supply and demand zones. And there is that internal bullish one. I just want to show you a couple of examples. We have an OB right there. We have a range. The market pushes into it. Lower low, lower high, lower low. How does the lower low form? With a massive sell followed by a massive buy. Okay, so you know, I've seen this pattern. I know this pattern. Ilya taught me this pattern, right? The market comes back. Where does it hold? 50%, right? Even here it went to the 75% as well. Okay, but spot that I didn't do this. What I did is the whole leg, the whole sell to buy. So again, I do not refine because I've refined way too much to enter like with a 1 pip stop loss. It just doesn't work. I'm telling you for now. In this case, it worked great. So you could have entered a trade from here with a 1 pip stop loss and you nail a massive banger. And that's fine if you want to do this. But the majority of the times, you're going to be missing trades.